Good morning, everyone. And I'm Baggett on the stock market caddy, and the markets have been running and running and running, right? Um, well, our systems have been long for weeks. Our Nicholas system went long first on October, completely confirmed on October 31st, and nobody wanted to get long then. We were even a suspect of the signal. And we never know, how long they're going to last. But here we are. When we look at um, Swing Machine is looking for the trend. So let me just show you something. Daily, daily view. Swing Machine went long 24 days ago. 24 days ago. So Nicholas goes long on the 31st because what did he pick up? He picked up the compression of the VIX and the compression of the yield on 10-year interest rates. That was the spark. That was the Fed signaling to his hedge fund buddies that, hey, look, we're out of this for now. And they went long. And then by November 10th, the trend was established. And there it is. If you had put on you know, well, on October 31st, you could have gotten comfortably a 4,200 call option. I mean, that was worth tens of thousands of dollars. But this Swing Machine goes long, and if you had put on a mini contract, yes, you're up 14,000. Well, bagger, what about the VIX? All right, let me show you something on the VIX. This is kind of interesting. On a daily view, the VIX went long. Excuse me, short 31 days ago on November 1st. That that was the tell, right? That's the tell. A short VIX translates usually into a long market. Well, what about the Nasdaq? Well, let's go look. This is on a daily view, so I just want to 27 days ago, November 7th. 20 now, if you're trading a mini, yes, you're up 25 grand. If you're trading a micro, you're up 2,500. If you're trading 10 minis, yeah, you're up a quarter of a million. Let's go to the Russell. Everyone's talking about the Russell this morning. Where's the Russell up to? So let's go put it on a daily, November 17th. So it was a little late to the party, but it is long. 9 grand on the Russell. How about the Dow? November 10th, November 10th, November 7th, 17th, November 10th. All right. And then of course this was certainly a tell. Now, before we leave the dailies, where are we, Don? Well, let me show you. First, the VIX. The VIX is not in panic sell yet, but it's getting there. It's been in there, right? It's there just means no fear, no fear, because they're selling it. Look at the ES. We're absolutely in euphoria. Now, does that mean just rush out and short the market? No. But what it does mean is if you are long, congratulations, enjoy the ride. But you need to be taking some precautions. Aggressive traders, though, um, we'll share what could be done. The NASDAQ in euphoria, the Russell in euphoria, the Dow a little less so. So we have the markets in euphoria. We have the VIX damn near in panic sell. And that's the way it was in August. That's where it was. Remember when we were at 4,600, 4,650? That was the situation we had in August. In fact, we also have something else going on. We have a very high skew. We didn't quite have as high a skew that we have now. And the skew means that the big money that they are holding their shares, they're selling calls to the sheeple, taking that premium and buying puts. That's what that means. And they're preparing. They're preparing for lower price. Where? What level? Well, we don't know. For how long? When? Well, we don't know that either. We never know, but they are preparing. And you can get prepared. Well, what do I do? Well, what I wouldn't do, speaking for myself, because we don't give specific recommendations, I'm not going to go into my 401k, my IRA accounts, and just go balls to the wall long. Now, no, this is not where you want to go long. Now, what I would want to do is if I am long, I'd want to maybe raise some cash levels, sell a little. Yeah, you can sell into it. You can sell some covered calls, and you can also use options to get protected. Now, if you are an aggressive trader, one of the things that we know is the likelihood that the price action on the S&P, all four of these markets, the likelihood that we're going to move back from where we are at 47.77 to 46.54. You may say, well, I want 4,100. Well, we got to first get back to the daily mean. The likelihood that we're going to move back toward the mean over the next 20 days is about 95%. Not 100, but 95%. 16.3. I mean, we were at 16,000 just a few days ago, so it doesn't seem, like too big an ask. Although right here, right now, everyone is so frothy, so bullish, and even 1886 on the Russell. So what one could do is go to the options market. If you're trying to play on a daily basis, you want to give yourself plenty of time. Maybe 35 days, maybe 40 days. And you could begin, even on some of the most extended stocks, begin thinking about call credit spreads, put debit spreads, and be prepared. Because this will run its course. But the problem that the bears have right now is that tomorrow is options expiration, and we're at the highs. So anybody and everybody who got short on these expiring contracts is kaput. They're dead. They've been dead, right? If they didn't cover, and they got it covered now. They got to close. And it's brutal how the market works. The people who are buying this are the very people who absolutely don't want to buy it, but they're the ones buying it because they're the ones who got short in the hole. They got short back at the end of October. They listened to, the macroeconomics and got caught up in the narrative, and it happens all the time, over and over again. And now and they will cover their bets between now and Friday, tomorrow, and they will close up their machines, and I'll never, never short again. I'll never, never get a put on. I'll never, never, never. Once this is done, now, so this could get really, really stupid today, and it could get even more stupid tomorrow. It's could. But after Friday, for these last 2 weeks, there's a couple of things going on. It's going to be much more difficult to put on this type of squeeze because these be trading fresh contracts. It is a holiday season though, and so it's difficult to get short a market when the volume is very, very low and during the holiday season. But it's happened before. It's happened before. I wouldn't expect there to be much more of a squeeze the next 2 weeks. We might see a little bit of a pullback. We might, and if it's a modest pullback, then we might see yet more rally into January. this is reminiscent. This situation has happened many, many times before. Um, the market is most bullish between November and May, going back hundreds of years. You're If a person just got long the market in November, beginning in November, and get out in May, your performance over the long haul is dramatically better without even shorting. So there's the seasonality of it. Think about, I think it was 2019 going into 2020. The market did something very similar. And we knew in late December and around this time that there was something called COVID, and nobody cared. Nobody cared. And in early January, um, we all knew about it. We knew about the carbon monoxide, the bodies being burned in China, um, and the market continued to run. We were recommending to our families to, get a supply of surgical masks, and it was unbelievable. I mean, in here, you know, we thought we knew it was coming, but the market didn't care, and it ran for the rest of December. And I thought certainly in the early part of January, I thought then it's going to dump. And it didn't. It continued to run. The end of January, it was still running. And we certainly all knew then about the threat of COVID. Nothing. Early February, market was still running in the face of it. Nobody cared. And then on February 24th, our Nicholas timing model gives a sell signal. The VIX shot up. The yield started to rise. And we're like, we think this is it. 3 weeks later, 3 weeks after this huge run up, the market was down 30%. Now, one could say, well, that was COVID. Well, maybe it was, maybe. And of course, it ushered in a whole new easy money regime. 1999, 1999. The market in August turns down into October. Everyone was talking about a bubble, and then it stopped. And then the market rallied hard into the end of the year. The beginning of the year 2000, everybody thought the Y2K. For all you millennials out there, what was Y2K? There was this panic, and I would say it was a panic, that all the computers were going to crash because they had not been programmed to handle the Y2K, the numbers turning to 2000. And there was this big concern and this big apprehension. And once the calendar turned and we got to January 2nd and everyone was still here, there was another huge rally. And the markets really, really took off. Everyone thought, that's it. And we rallied hard to March 5th. And then on March 5th, the NASDAQ was at 5,000, had crossed over 5,000, went to 5,035, I think 30. 9 months later, the NASDAQ was down 90%. You can't, the economists and the market people today can't tell you how or why it did it. It just did it. So what's the lesson in the story? Nobody really knows, right? We can speculate about, but nobody knows. Least of all, the crowd. if you're always waiting on the crowd, you want to move with the crowd, then you will get run over when the crowd decides to exit or the crowd decides to do anything. The time to have bought the S&P was back in late October, early November. We show these algos every night to our members. Our annual members have these tools on their desktop. It is sometimes hard to believe. That is the rational side of your brain. Like, where are these people going? What are they doing? It's like anything else with a crowd mentality. But in general, now we're not going to just trigger trades based purely on this, but Warren Buffett has the old saying, when they're yelling, what do you want to be doing? Selling. When they're yelling, you want to be selling. When they're crying, which was back in October, you want to be buying. When the VIX is low, you want to go. When the VIX is high, you want to buy. It's very hard to do because if you don't have a discipline, don't have an approach, don't have experience, then you won't have confidence and it'll be very, very hard to do. Because the moment you put your trade on and the trade has a drawdown, you will be filled with self-doubt. So what do you do? Well, I think you've got to find yourself a discipline. You've got to get yourself into a silo. You've got to get rid of the TV. You got to stop listening to all that shit. It is not has nothing to do with what the Fed said or did yesterday. They're just putting icing on the cake at this point. And you'll always be behind the curve. You know what that means to be behind the curve? The pitch is going to throw you out. You're going to be swinging late. So other people can, timestamp their tweets and whatever else. We're not doing that. We'll occasionally put something out, but Swing Machine will timestamp it right here. If you don't want to trade on a daily basis and you want to trade on an hourly basis, Susan loves the hourlies. Let's do that. So let's go to the VIX. Remember about the VIX. When the VIX is in short mode, the market is mostly green on an hourly 92 hours ago on December 8th. All right. So let's just use that as a signal. We don't get short the VIX, but we're paying attention. Let's go to the ES. Let's take a look at this on an hourly. At 11 a.m. on December 7th. When was December 7th? That was last Thursday, a week ago. A week ago. Not yesterday, a week ago. 11 a.m. The market goes long at 46.36. There's $7,000. Watch. Are you kidding me? What kind of crap is that? 114 hours ago at 11 a.m. on December 7th. How about the Russell on an hour? 18 hours. Okay, so it has cycled. And then the Dow, 92 hours ago. All along. What was doing that? Do you think that was Mar and Pa Kettle? Kind of dating myself. Remember those old movies, Mar and Pa Kettle? You think that was Mar and Pa Kettle? Getting on their phones on I-10, the Mass Pike, the New Jersey Turnpike, I-5, calling their brokers and brokers, I want to buy some stock today. You think that's what was moving this? That doesn't move the markets anymore. It's nonsense. They don't talk to their brokers. Brokers don't talk to them. It's all passive. It's all one big bowl of goulash. There will be some occasional, you know, um, you know, stocks that do a little bit better than the overall market, but the overall market it's been commoditized. We were saying over the last couple of days, look at oil. Don't don't sell oil down here. Why? Let's put oil on a daily. See, oil has been short for 32 days. Oil was in panic just the last couple of days. We were saying, don't short it down in the hole. Look for an opportunity to get long. So then and then you begin to see how we begin to use the tool. You say, hey, wait a minute. If if oil is in panic on a daily, maybe I should be taking some buy signals. There you go. If you took that buy signal. So if the S&P is in euphoria, you might want to be waiting for the 5 minute and just wait. It's not as long now. They're still running. All those folks that are in those contracts, they're jammed. They can't get out. And what's so perverse is that they're the ones who shorted it. And they know it expires tomorrow. And the market players know. And they're giving them an absolute lesson, an absolute can of whoop ass. But the problem is they never learn the lesson. It happens all the time. And then they're going to attribute this though to Santa Claus. No, it's a play. It's a football play. It's a soccer play. It's what these hedge funds do. I'm Bag of Dawn. This is Stock Market Caddy. You're welcome to visit the site. Gonna have a busy morning here. And if you have any questions, let us know. If you want us to plug in anything, any of your stocks, right? It is what it is, right? This is our flagship product. We got a whole lot of other products. It is what it is. Um, our members could be listening. Um, and some are here this morning on our live Zoom feed. When I tell you that the Nicholas triggered on October confirmed, it first triggered on the 30th, then confirmed on the 31st. It's up over $110,000 collectively. It is what it is. I can't be making it up because they have it. Do we have members that got it? Yes. Do we have members that missed it? Yeah. I mean, we don't get them all, you know. So when this market turns, we will see it. The question is, will you? We wish you the best. We'll let you watch. By the way, I meant to say is if you want an acid test, if you want us to plug in any market, any stock on any interval, and you want to see real time, how is Swing Machine positioned on your stock or market? I'm happy to do that. Just let me know in the chat function and I'll put that on the chat. We don't have to timestamp tweets. We don't have to, go to alerts. If you want these tools on your desktop and you want to build alerts, you can do that. They will be your alerts. You don't, once you have the tools. So if you want to know when the S&P on an hourly basis turns down and triggers, then you just set an alert and it'll go to your email. These hedge funds, it's kind of like, they stoke it, right? They have unlimited capital, leverage capital. They can shovel that capital into the locomotive, into the furnace, and just, make unbelievable amounts of money. They're not handcuffed to all the narrative and all the bullshit. They're machined and they just literally just shovel leverage into the market. And when it goes the other way, they will take it out, just as they did in August. There's a reason why the markets have a tendency to turn down between August and October. That is because that's the end of their fiscal year. They wanted to bank their profits, and they did. Did you see the headlines how Citadel is returning $7 billion in profits? Where do you think that money came from? He traded it. He extracted it out of the market. He's now, down in St. Bart's in one of his $500 million homes or someplace, right? And then they will do it again. And the workers are working and collecting money and trying to get ahead, and they just keep pouring and sending their money into these guys, and they'll extract it out. It will come out. At times like this, when everything's green, it appears bulletproof. It's never going to go down again. We're going to 5,000. We're going to pick a number. We're going to 5,200. I don't know. Maybe we are. Or maybe the S&P is going to 10,000. Maybe we are. I don't know. I mean, the Nasdaq futures have gone from, five. They were just at 16,000. Maybe we're going to be at 17,000. They're going to be one of those guys, Oh, we're going to 17,000. We're going to 5,000. It doesn't, to a trader, it doesn't matter. How come? How come? Why doesn't it matter? Because we're not betting on that number. We're playing the ranges up and down and up, and extracting cash flow. But if you want to play that game, there's a market that loves to play that game. It's called the Bitcoin or the crypto. Buy and hold. We're gonna really fool them. We're gonna, oh baby. You know what? These Wall Streeters, we're gonna buy and hold. Wow, that's something that's really gonna put a hurt on them, right? I don't know. Maybe Bitcoin, the woman at Ark Capital, I think, or Ark Investments, I think she said Bitcoin's going to like $1.5 million. I don't know. Maybe it is. I don't know. Who would have thought Apple would have gone from $5 to what it did? But then again, maybe Bitcoin is Sun Microsystems going to go out of business. Maybe it isn't. Everyone's like, oh, did you hear the news? There's going to be an ETF on crypto. Well, so I got to get out in front of it and got to buy that thing. Everybody, that's, oof, plastics, that going to be out in front. You don't think anybody else knows that? You don't think they know that? That may not be such a good thing. Gold, hasn't done that much since the GLD got created, but who knows? Good morning, everybody. And don't forget tomorrow's options expiration. So anybody who's been short this whole 3 months and is trapped up here, they got no choice. They have to buy it to roll out. They probably experience so much pain, they're probably not inclined to roll short the next contract. But that's what's going on. It's a technical squeeze here at the end. It started on October 30th and 31st, and we had some nice volatility, and then they capitulated, and they're getting barbecued, absolutely barbecued. So after tomorrow, it'll be much more difficult to do this, and we'll get back into some two-way action. These the last couple of weeks. It's not likely that this thing is going to just turn around and crash out either. Not likely. Um, what could happen is we turn down, on the next turn down, um, and then the best setup would be that we rally back up and higher, and we get that false high look. And that could take some time to set up, right? That's going to take some time. We have to remember that there have been other ends, this is the end of the year stuff. And even in the year that we had COVID rolling out, we were describing earlier, the market not only ran into January, it ran all of January, it ran the beginning of February. We all knew about COVID. And it wasn't until February 22nd or 24th, somewhere around there, that it finally gave it up. And in 3 weeks, 3 straight weeks, we went down 30%. Is that in the cards this time? Um, one can never know, right? One could never know. It may not be COVID, could be something else. You never know when they decide to do it. 1999, 2000 is it seems eerily similar to me. To me, it did something very similar. The market 1999 ran down August to October, then it rallied. Everyone was concerned with Y2K. Nothing happened. And maybe similar people thought, oh, we're going to have a recession. It didn't happen. Oh, it's over. And they pile in. They just pile in. And this will get them maybe even the 1st of January, and all that new money and everything comes in. But we're traders. We trade the flow, and if they're buying it, we're buying it. They're selling it, we're selling it. We need to stay in our silo and stay proportionate, stay patient, stay disciplined, extract your cash flow, and it's just another day in the market. Doesn't really matter. Is gold going to 3,000, 5,000? The only time that matters is if you send a broker or a hedge fund or whatever, you send them all your money, and you're vested in, Bitcoin going to 100,000. You're vested in gold going to 5,000. You're vested in then the S&P going to 10,000. Good luck. Good luck. I hope you get it, but that isn't what we do as traders. We're trading the ranges. That's it. Proportional. It's really pretty boring stuff. It should be boring, but it is something to marvel at. I'll just show everybody how quickly you can do this. This is actually 60 minutes. I didn't mean to do that. Let me show you the VIX. I'm going to change this. I'm going to try. Oops. Uh-oh. My computer got sluggish there. Okay, I may have too many things open. I'm going to put the VIX on a daily. The VIX turned down on Swing Machine 31 days ago. 31 days ago on November 1. Now, You don't necessarily have to have shorted the VIX, but that was a warning that the market wanted to go long. Now, we have, and our members are listening, we have a tool that we call the Nicholas timing model. It's an algo, and it looks at the underlying data, but it also looks at the VIX and it looks at the 10-year yield. On October 30th and 31st, it flashed long. It was kind of shocking to us. We didn't expect it to do that. It's still long, by the way. It is still long. The trends didn't start though until some days later. So let's go to the S&P. Let me just show you. So we don't have to timestamp anything. It's here. I mean, I can't backdate this. The S&P went long 24 days ago at 44.78. So Nicholas was long much earlier. He was long when the S&P was at 41.50. But this was long on the trend on a daily at 44.78, November 10th. How about the NASDAQ? 27 days ago, 27 days ago on November 7th. One mini, you're up 15 grand. One mini, you're up 25. One micro, 1,500. One micro, 25. You got 10 of them? Congratulations. You got, 6 figures and plus. Let's look at the Russell. Let's put the Russell on a daily. 10 grand, 19 days. Took a little longer. The Dow, let's put it on a daily view. Oops, sorry about that. 24 days ago. Same day as the S&P. The markets are commodities. They all move together now. There's just too few stocks, too much money. It's all one big, bowl of goulash. And money flows in, money flows out. These hedge funds shovel money in, they shovel leverage in like a steamer, somebody shoveling coal into an old steam train from years ago. It's just, they just shovel it in. While we're here, let's just take a look at oil. Oil went short 32 days ago at 80. Yep, 8 grand. All right. I guess let's do the whole thing. We might as well go all the way down. Gold, 41 days ago, long. At what price? 1988, 7 grand. Bitcoin, let's put it on a daily. Long, 43 days ago, 66 grand. Okay, so now you need, the likelihood that a non-trader is going to capture and retain this money is slim and none. And there's a reason for that. They get excited. They get excited about the money, They go to the driving range, they get a bucket of balls, they hit a couple balls, and one goes 300 yards. Woohoo! And then they pick up their golf clubs and they go to the golf course and they find out that the game is a lot tougher than just that. We have to do this day in and day out, right? As traders. Now, if you're, investing for the long haul and you want to, you can choose your interval, but the further out you go, I would strongly suggest that you reduce your leverage, if not use, no leverage. But that is what it is. Now, maybe you want to trade on a 60-minute interval. Now, even a 60-minute is overnight, right? Because we're not going to get enough turns in the barrel on an hourly basis to trade effectively intraday. But 60-minute is a pretty good swing time. And it's one of Susan's favorites. 60-minute. VIX turns down 93 hours ago. it turned down on the 8th. What does that mean? To our members, they know that that was a warning that the markets might go long. So let's go to the 60-minute here together. Check this out. 115 hours ago. When was that? 11 a.m. on the 7th. That was a week ago. Are you kidding me, Bagger? You got an hourly signal that lasted a week. We've had them last 2 weeks. I know it's frustrating. We have to trade around it and it gets stingy, if you're not in that particular trade. How about the NASDAQ? 60-minute. Are you freaking kidding me? We got 500 stocks. We got thousands of NASDAQ stocks, and the indices went long at 11 a.m. last Friday. Do you think they had an idea what they were going to do? Right? We're not going to get the phone call, but you are going to get the signal. It's just money flow. Don't ask why. Don't ask me why. I have no idea. I think they're all nuts. I do. I'm not even sure the markets are real. I'm as skeptical as I'm beyond skeptical, but it is what it is, right? It is, if you bought it and you sold it right now, that's how much you'd have on one mini. All right, let's go to the Russell on a 60-minute. And that lagged, okay, 19 hours ago. How about the Dow? My guess is the Dow is very close, 92 hours. How about oil? You want to trade on an hour? 17 hours ago, oil goes long. Well, that's kind of interesting now. Well, wait a minute. How can you be short and long and short? How does that mean? Well, on a daily basis, when the markets get really, really extended, as oil was, see, on a daily basis, that brings in something else. And let's show you. Just a few days ago, oil on a daily was in panic sell. Remember, it was trading like at $68 and it was in panic. And we were telling our members at night, oil's in panic. Don't short it in the hole. Look to buy it. Oh. And if you bought it on the hour, you would have bought it at 69.87 at 5 p.m. You'd be up $2,000. Thank you very much. Why is oil doing that? I have no idea. I have no idea. I don't have a crack research team of a bunch of unemployed Wall Streeters. I get a kick out of some of these folks, they're like, we're the new Wall Street, and they're all unemployed, they've all lost their jobs from to the machines, and they're trying to redo what they had. Here's gold on an hour, 19 hours ago, and then Bitcoin on an hour. Now, there's quite a bit of leverage on Bitcoin. So it's quite a bit of leverage. So there you go. But the view that you're seeing here most days is a very abbreviated intraday view, and there's a technique for trading this, which we don't have time to go into. And we're not doing these videos suggesting that people trade from this. You're on delay. You don't know how. There is a technique, and it has to be practiced. Can you shank it? Yeah, you can. You're looking at Swing Machine and you got a signal and you listen to some Yahoo on CNBC for a few minutes or some podcast. And you're like, all right, oh man, I guess I better do that. And then the next thing you know, so there's an old saying, don't fight the Fed. Don't fight the tape. We don't fight Swing Machine. I don't. I don't. Does he get them all right? No, but he gets a lot of them right. But I'm bagging on. This is Stock Market Caddy. We invite you to visit the site. If you want me to plug in a particular stock, let me know. And I'll do it on any interval, and you can see for yourself, because we can do this with stocks. What you have to come to grips with as traders, as everybody, you have to come to grips with this. And it's this: you're the coach of the team. You can run different plays, and you can think of it in very, very small terms. I'm going to just, every day do something a little bit different and just run, one or two plays. There's a place for that. But if you have, considerable assets, you might think about what you're doing. You might have assets allocated to trade intraday. You might have assets to trade, with options going out a few weeks or few months. And then within that, there are different strategies. They can be income producing strategies with options and totally fine. And it can, you want to kind of complement each other. So if you have a sour day or two trading intraday, you have your income producing strategies, maybe in the options market generating some cash as well. You're the person. And we're asked sometimes, well, Don, how come you don't have an alert service? Why don't you trigger an alert service? Well, if you have these tools as an annual member, you can generate your own alerts, all kinds of alerts. Why not do that? You don't need to subscribe to my alert service or anyone's alert service. Build your own. And if you build your own, you know exactly what it is, what it's capable of doing. But mark my words, please write this down. Please don't trade on this. But I want to caution everybody. The VIX is damn near panic, and the S&P is in euphoria. You do not make money in the market buying the market when it's in euphoria and when the VIX is in panic. In fact, you will make money doing just the opposite. Now, please don't rush out and just, oh, you just said, I'm just going to short the market, Martha. I'm going to put everything in. No, don't do that. Please don't. Right. But you can, using options, define a risk. The likelihood that and this is what's going to get tricky. And if you're not a trader, it's not really that tricky. We're trading at 47.80. What we know, and we're in euphoria, the likelihood over the next 20 days, write it down, that we trade back to 46.55 is 95%, not 100, 95% in 20 days. So if you're doing some options, maybe give yourself a little cush. Maybe go out 30 or 35 days, right? Maybe go out 40 days. But the likelihood that we trade at 46.55 is that high. Now, do we overshoot? Yeah, we could, right? We could. But Don, we were just at 4,100. I want 4,100. Well, it isn't, market doesn't do that, um, all the time. No more than when we what was the end of October? The end of October, the VIX was in euphoria. The market was in panic sell. And that's when all the bearish podcasters are, predicting gloom and doom. And then the market turned on a dime and went up. Why? Because the hedge funds plowed money in. That's it. And when they plowed the money in, the VIX got compressed, the yields came in, and then the Fed just followed them. The Fed is following the money flow of the hedge funds. It takes them about 90 days to build positions and to come out. They'll trade around it. My concern is what could happen is In 20 or 25 days, we'll be doing a YouTube video and you say, man, I remember him saying it. And we'll be down maybe at 4,600. And then what could happen is there are folks thinking that they missed this. They didn't buy it in October and they're thinking everything's okay. And so they're like, man, boy, the next time that market comes down, I'm going to get in. That's what they do, right? So we do something, we're at, 4780. So what happens is we come back down to like 4,600, 40, maybe 45.50, something like that. And then the real margin, what's called a marginal buyer comes in. That's the person who didn't buy in the last 3 or 4 months, and then they buy. And we go shooting right back up to 47.80. And maybe we do something really stupid and we go to like 5,000. That's possible. It's possible. And it sucks them all in January and in February and in March. Maybe it does something like that. And we have systems that'll be tracking that and tracking the strength of it. And if we get what we call a false low, that's when we will step in with a little bit more leverage and fade that. And that's when it burns out. But we don't know. We don't know. I'm not saying that is going to happen. I will say this: tops are rounding affairs. So when you have a top in the market, it it you'll go up, you do something like this, you go up, and then it takes time. It's rounding, and then she starts to kind of leg down. It's a rounding, has kind of a rounding look to it. Bottoms, will come down, and a lot of times they're what they call V bottoms. Very, very sharp. V bottoms, rounding tops. And this is, we believe, it's really just a function of the hedge funds because they're short, they know, they're done, they close their positions, and then they rapidly buy, and then they go up. And then as we're up in here, the noise level is very high in the media and in the markets. And the hedge funds that bought down in here, when they're up in here, they're distributing the shit, all the crap paper they bought, 3 or 4 months ago. They're distributing it and stuffing it into everyone's, retirement accounts. Sorry, but that's what they do. And then, and we just do it over and over and over again, and they do it. But again, look at the headlines. Ken Griffin at Citadel, one of the richest people in America. He runs a quant. Try to get into his office, right? Super, super secure, right? They're so secure that the people that work for them, they don't all know the full programs they run. They only know piecemeal. I don't know if you know the story. They had a gentleman from Russia who left the company and tried to, and the federal government went after them. He went after them because he took snippets of code with him. But Ken Griffin has about 5 or 6 $500 million homes. He just distributed to his shareholders, which is probably BlackRock and all the, try to get an account with Citadel. Not likely. He just distributed $7 billion. Oh, Merry Christmas. Where did he get that money? He traded it. 7 billion. He's extracting it out and he's now distributing it. He was selling back in August. It's where he raised the capital. By the way, he moved to Florida. They're now building a great big tower down in Miami on Biscayne Boulevard. He is a quant. They are quants. They trade, and I was surprised at this. I'm sure they trade futures, but they trade primarily options. So, any case, we're traders. So I'm not going to add to the noise. I don't want to. Got to be very, very careful. When the markets get very, very bearish, very, very bullish, the noise level picks up in the media. Um, it happens all the time. And you have to guard against letting any of it creep into your head, especially as a trader. You don't want it. You don't want it to, and I don't want to add to it. Just so I'm going to put these back to where we have them here. We're working on a number of things, so we don't have any programs running in view here, which we usually do. We will try to get back to that in another week or so. But we really have got to get done what we need to get done here. But we'll see. Swing Machine is an algo. It doesn't get all the trades right. This is how it's positioning. This long T, short T is telling you how many minutes. It's a shorthand. So the ES went short. Please don't short it. 10 1-minute segments ago. That's what that means. And the entry price was at 47.80 and the time was this. And then this is giving us trend information. And this is also giving us information on the fear gauge. And then the 5-minute was long. It's dipping 25-minute segments ago at this price at this time. And you can see the trend is under pressure. There is a technique that we trade it. And we spend quite a bit of time with each person in the Q school, teaching them how we like to trade it. And I don't, unfortunately, have the time here to go into great detail. And again, we're not showing this because you're on delay anyways through YouTube. The oil futures, we just said this a couple of days ago, right? I mean, in this thing, if you find yourself impatient, if you find yourself reacting to your emotions, you're probably using too much leverage. Just back it off. You'll do much better. Just back it off. So if you're coming in with the oil and when it was down at 68 and 69, we're saying, hey, it's overdone. You want to look to take a buy. Well, if you bought it with a mini, yes, you're up, $2,200. But if you find yourself like, wow, I'm up like 600, I'm up 1,000, and it's got hold of your emotions, use a micro and learn to relax. Learn, and that's maybe not fair. Learn to relax. That's like telling somebody, don't be nervous. We have tools. And during the Q school, we teach everybody how to use those tools to get control of those emotions, right? So, and you have to just use them. You have to learn to use them, and you have to use them, including me. Yeah. And Susan's my risk manager, and we the moment we get a little sloppy, like, oh, I think I'm gonna do something a little more artful than mechanical, and that's when you get caught. Right. So we're using in these trading robots that we use, it's robot assisted trading, not just plug in the robot and it's automatically going to print you money. Right. You have to have a quiet trading skill. I was listening, I say this to everybody. I like listening to these podcasters that teach people and talk about, running a small plane. I don't know why, because I don't even fly, right? I don't like heights. I don't have a plane. I don't fly. But they were profiling. It was a shame. She was a YouTuber called Tennessee Fly Girl, TNFLY Fly Girl, very pretty girl. Her and her father crashed the plane and they got killed, sadly, on December 7th, just last week. And so one of the podcasters I like to listen to, his name is Blanco. He's a commercial pilot, and he was analyzing it, and he's theorizing that she wasn't adept at operating the autopilot. Isn't that crazy, right? Yeah. And he did a whole section on it, and she was uploading her videos, and uh she didn't, and he was like, she's doing different things. She's not and she's not paying attention, and she wasn't properly trained in operating the autopilot, and she crashed the plane. She's dead. We don't, you have to realize this. You have to learn to trade in proportion whereby no one trade crashes your account. Zero. Can't happen. Stop doing it. You've got to stop. If you've done that, if you've crashed it before, you have to stop, and you have to think, and you have to get an education. And I don't care where you start from, $2,500, $5,000, 50,000, 500,000. We don't want any crashes. And you have to just go very, very small, and you have to learn to use the tools. And I got to tell you, I was watching it, and I'm like, I kind of, I actually described it to Susan. I kind of felt bad. I did feel bad. And it looked like that autopilot was pretty, it was a pretty sophisticated little plane she had, and it looked pretty sophisticated. And it was as simple as, she was pushing a button and not releasing it and holding it, and she probably stalled out the plane. Um, the other thing is, she had, can you believe this? I said to Susie, she had note papers, the little 3M stickums. She had stickums in her cockpit with little notes on it. Are you shitting me? Are you guys trading with little stickum notes? I hope not. I hope not. I mean, you got little stickum notes on your screens and in your cockpit, when this does that and that does this. You got to get well past that. You got to practice, 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 and know exactly. You got to know exactly what you're going to. You may not win on every single one, but you got to know. So during a period of high stress, market stress, you know what you're doing. You can't be relying on a 3M stickum note or a little note. But in any case, I digress a little bit. Feel somewhat comparable as the market turns down a little, right? So, but this is just, a little bit of profit taking, 18 minutes on this 1 minute trade while we've been chatting. Yes, it's up to 60. And um, uh, in the beginning, you might get excited with the money initially, but our members they work so hard at this. They are so beyond getting excited on any one trade, because they know what these markets are capable of. So, and again, we're looking at an intra. We're on the field, intraday, 135. I'm not looking at the daily in the 60-minute. And those intervals are too far away. Don't think that because the daily is in an uptrend that you can't short intraday. It's too far away. You most certainly can, right? All right. I kind of rambled on there a little bit. I'm going to need to step away, but I'm going to let you guys watch. If you have any questions, be sure to visit the site. Send us email. If you got any questions, just make them specific. I get occasionally a question like, how much does it cost? It's all explained on the website, but if you just got a specific question, send it. If you still got questions, you're welcome to call. I don't bite. and 813-758-8263. And we'll see how this plays out. But I want you to write down, um, can we put the S&P? Let's put the SPX in here for a minute. SPX.X. This is the S&P. Let's put it on a daily. Yeah, she's at 47.20. Look at that. Look at, she's right up in there. That is a beautiful thing. Great run. 41.50 to 47.20. I hope you got a good chunk of it. Did we get some of it? Yeah, we got some of it, but did we get it all? No. I never get it all. Dang it. Next time. But even then, we've done it. I laugh because you never get it all. That's not $338. That's 338 points. 338 points on this call. This goes back to the S&P at on November 8th. Nicholas, he went long on the 30th, and I can tell you, and our members can confirm this. Let me see how much Nicholas is up. Oh my goodness, it's up a bunch. Yeah, Nicholas is up $109,000 collectively. This is it. You know, if you don't believe me, let me drag this into view. There it is. This is the Nicholas timing model. Daily. He went long on the 30th. Oops, you can't see it all. So let me drag this over. Bear with me. Can't see the money. So that was the signal was on the 30th. Now the VIX wasn't confirming on the 30th. The VIX confirmed on the 31st. And then we did have a couple of warnings on the VIX, but they rolled. We need to have the VIX short, and the VIX went short again on the 8th. And so if a person had put a mini contract in here and still had it, one, you'd be up $109,000. Now, when this signaled, everyone saw it, including us. And it was up, 5,000, 10,000, 20,000. I mean, it was just a few days ago, it was up 80,000. We don't know how long they're going to last. Nobody does. If you did it with a micro, you don't have micros in the VIX, but you'd be 1/10 that. I mean, if you had done it with 10, I mean, you're talking $1 million. But it is what it is. What will happen is the sell signal, they'll all need to go short and the VIX will need to go long, and we'll get a sell signal. But it won't happen intraday. It'll only happen at the close of a day. But this signal's been here for 3 months. Boring as hell. Dang it, boring. It is boring. What is in this Nicholas timing model? It is an algo. It's nothing it's a black box to Susan and I. There's nothing that we can see. It is looking at the data of the ES. You have this, and our members have to set this up. We explain how the data of the VIX and the data of the 10-year Treasury, which now we've been doing this for years, which, how important is that? The data of the indice, the VIX, the options market, and the yield on the Treasury. Do you think those things are important? Yeah. Yeah. Oops. Sorry about that. Got the wrong thing here. Let me pull this over. So my office is very quiet. No, let me get rid of the S&P, by the way. That's confusing. ESH 24 now, right? Incredible. And let's put it back to a 1 minute. How boring is that, right? No, it's not boring. So see, intraday we use, here's the 5 minute trying to confirm right now, which is this, see this number two? It's the second 5 minute signal or confirmation. So the 5 minutes trying to get short right now. Please don't rush out and short the market, but um, but if you wanted to have any aspect of Swing Machine alerting you, if you had this on your desktop and you wanted to set up an alert where the alert goes to your email, and then from your email you'd have to set a program to send it to your phone. Um, but it can be done, if you want to do that sort of thing. You know, I'm, you know, and it's kind of oscillating back and forth here. We're getting some big market orders. Now we do this not so that anyone can sit home on YouTube and try to pick off orders. If you're doing that, I think you're missing it. I don't think you should be doing that with us or with anybody. Um, you know, it it isn't that isn't going to get it done for you for the long haul. Just isn't. But I do want you to know at 11 o'clock today we'll have to bring the YouTube session to an end. And again, if you have any questions, though, you're welcome to shout. And these are robot assisted trading devices. We have dozens and dozens of tools. You don't have to use them all. We talk to members all the time. It's like they use maybe one or two things. Great. Get it as boring as you can get it. As long as you getting the fish in the boat day after day. Enjoy. So on a minute level, 47 minutes ago, swing machine goes short at 47.80. It's just a 1 minute. What you don't want to be doing is stretching trades out, trying to think, well, that's going to be a daily. Um, no, it might be, but you don't plan on that. You want to enter on the time frame. You want to enter and exit on the same time frame or smaller, ideally. Um, 48 minutes though, a little bit of a sell program, right? Again, we want to say thank you for those coming by on YouTube. And at 11 o'clock, we'll have to turn down. You're welcome to call. Have fun.